Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at Markets at Fair, Brian Joyce is a managing director on Nasdaq's market intelligence desk. We're going to take a fresh look at charts in Bitcoin, which is so appropriate considering it's blockchain week. Brian, I don't know about you, but I feel like all of New York City is everyone within the blockchain and cryptocurrency space, and it's been quite a run. Let's take a look at the chart in Bitcoin comps.
Yeah, it certainly has. We're certainly now seeing Bitcoin back on the front cover of the media these days, where it's where much of last year we didn't hear much about it because of that. Spend most of that time, as you can see in the far right corner, in a downtrend. So this is the long-term chart here, Bitcoin, which goes back about 5 years. Bitcoin was up about 5,000+% in 2013, before then rolling over 84, 86% in 2014 into early 15. It bottomed, as you can see here, at this purple line, which is the 200-week moving average. It spent a large part of 15 consolidating along that level, a clearly defined support line, not because I say so, but because price clearly reacts every time it touches that level. Buyers are stepping up. It then had a phenomenal move from 16 into 17. In 2017, we were up about 1,300%. Just a ridiculous percentage gain. And so in 18, what happened again? We had another very sizable pullback. And the point of this chart is to show the similarities in the 2018 pullback, where we declined roughly 85%, the same amount as we saw in 2014-15, and again bottomed right at that 200-week moving average. So the same decline, the same moving average it bottomed at, and the amount of time was about 12 to 14 months for each period for that decline to take place. So very similar type of pullbacks. And so now the theory then is, when we wrote this up in January and February, was that maybe Bitcoin is flushed out and is now about to resume the uptrend. If so, will we have another 16, 17 kind of move? So far, we've been seeing that in the last couple of months.
It's really interesting because one of my guests, when I was covering the Digital Asset Summit yesterday, we were talking about how Bitcoin and other cryptocurrency doesn't necessarily have a set of fundamentals to evaluate like you would with a stock or in the bond asset class, that it really is a networking kind of trade. Volume begets volume, liquidity begets liquidity, and I wonder if that's part of the reason why you see these moves where it's either just one extreme or the other. Let's get a longer term look. Let's take a look at the weekly chart.
Yeah, so on that note, I'm not smart enough to explain why it is moving the way it is. I like to focus on price action. The arrow I have in the far right corner there is pointing to the first week of April, which happens to be the week after the Fed doubled down on its dovish pivot in late March. So maybe it's coincidental, maybe it's central bank easing, maybe it's something else. But we did have a roughly 23% move in the first week of April. We broke above a 3 to 4 month resistance line at 41.85, which is that dotted blue line. And not only did we break above that, but we also broke above the declining resistance line, which clearly is important. You can see the number of touches on that line. The greater the number of touches, the more important that level is. And we broke above both of those resistance levels in that 1 week. We then spent 3 weeks going sideways, and now in the last 3 weeks, we've been resuming that uptrend. So we're up about 115% year to date, which is certainly a great start. And I have these dotted lines going across the top. The horizontal levels, this week's high came within about 100 points. There's a very small percentage difference of the 84.80 level, which we saw was a pivot back in, let's say, August or September of 18. So I'm expecting that to be the initial potential resistance level. And then above there is the 9,800. And also, I forgot to mention, just last week, what really impressed me was last week's move above that 6,000 level, which we could see is that blue dashed horizontal line. That clearly was a support line for 6 to 8 months throughout 2018 before it broke down. And you can see once it broke down below it, it had a sharp acceleration to the downside. The expectation is on the way back up. That should be resistance. The fact that Bitcoin blew through that resistance, cut through it like a hot knife through butter, that tells me that there's some powerful forces behind this move higher, and I certainly expected that to be a greater resistance level than what we have ahead, which is 84.80 and 9,800. So time will tell, but we'll see. All
right, let's take a look at the next chart where you've identified a golden cross in Bitcoin, and everyone kind of gets excited when this pattern emerges. Explain to us why.
Yeah, I added this here just for a little fun. I get a little scared when I see the golden cross. It's become so common to the non-technicians when they see that signal, and it's historically, traditionally a bullish signal. But if you actually go back in time and you look at various metrics or indices, various instruments like the S&P 500, it's not always the case. But certainly here what we have is the 50-day crossing over the 200-day moving average. Traditionally, it's a bullish signal. Given the already massive move to the upside, I wouldn't base my investment decision on that, but certainly something that you could add to the bull case if you're looking to create a list. Okay,
let's take a look at the technology sector here. You've also identified another interesting pattern, a dragonfly doji.
Yeah, so I like to look at the candlesticks. We certainly had some interesting news in the overnight with the executive order by President Trump. There's been certainly an elevated number of headlines regarding what's going on in the trade war. We've raised tariffs from China, which we had threatened to do months ago. So the last couple of weeks, we've seen a lot of volatility in the marketplace. So here's the S&P 500 technology index. It's been the leader of all the 11 GIC sectors. As you can see, it bottomed the last week of December. It actually finished that week on a positive note, which was the start of 18 out of 19 weeks in the green. So a phenomenal run. The last 2 weeks we had a pullback. You can see the top 2 weeks ago, that's called a spinning top candlestick pattern, often seen at the top of a trend, denotes a change in character and a potential reversal. We got that reversal last week, and then downside follow through this week. However, the last couple of days we've been rallying off the lows, and currently we're basically flat to last week's closing price, which coincidentally is the prior all-time high we made back in the summer of 2018. So that level, 1335, give or take, is clearly an important level. It's the prior high. It was last week's close, and we're back there today. I suspect we may close around here tomorrow to close the week out. So this week's pattern, if it holds just like this, it's referred to as a dragonfly doji pattern, a common bottoming candlestick.
Why? Why is it because that last candle looks like a dragonfly, or is it?
I guess that's the name. It comes from the Japanese from hundreds of years ago when they used to chart the rice trade. It's only been used here in the United States since the early 80s, but it is commonly used. The great thing about them is they allow you to identify risk levels. So, for example, if I'm looking at this week as a potential low in the tech index, you want to take as much emotion out of your investment process as possible as an investor, especially a short-term day trader or a swing trader. And so what that means is if I'm looking at this chart, I think this week the low is in for the tech sector, and now we're going to resume to the upside. Well, if I'm wrong with that analysis, how do I identify when I'm going to be wrong? For me personally, I would use this week's low as my risk level. If price gets below that level, that means I'm going to take my loss, sell my longs in the tech sector, and reassess, come back another day. But I'm not going to stay in that trade and watch it trend lower and lower and lower. So the candlesticks really are helpful in that way. What's important about this range, why it's a bottoming pattern, is because you had a big downtrend, but we're finishing the week up near the top of the range. And so that denotes, even though there's a lot of weakness, certainly last night was news, the executive order, that would cause many, including myself, to think that we're going to come in today.
I thought so too. Today's action has been, and no one can identify why. I mean, the fundamentals really aren't that good coming to trade today.
Yeah, and so maybe the belief is the supply chains are already underway of being diversified to other nations. I don't know, but I can look at price and I can say it's pretty impressive to see the rally of this week's lows. We also yesterday had the announcement by Trump he's going to delay auto tariffs for 6 months, and that certainly helped fuel the rally yesterday morning after the very weak retail sales data.
All right, Brian, as always, appreciate the chart talk. And thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.